What's happening, everybody? Happy Thursday. Interesting day in the markets. Pretty exciting way to start things off, then calm down. We're kind of just hanging out in the middle. So here is what the day looks like. Track that towards the end. Here is SPX this morning. Wall Street slides is weak. Walmart guidance prompts worries about consumer demand. Oh my gosh, the stock that is only way overvalued is deciding to come down a little bit. Yeah, I mean, consumers are stretched freaking thin. I don't know how consumers have survived this long by adding credit card debt and having no savings. But yet here we are talking about it. So was that why the market dropped today? Sure. Put a Y to it. There you go. What else? Fed may still be able to cut rates this year despite tariffs. Okay. Anything else? Walmart stock drops. That's it. Okay. So let's talk about Walmart. Walmart was trading up to 105, has now dropped to 97. We actually had earnings on Walmart. Barely beat revenue, which is, an eke out of 0.27%. I'm sure their guidance was a little bit softer. Look, I appreciate Walmart for being honest. I mean, who is it? Walmart, Costco, and Amazon are the three largest worldwide retailers. And did it drag other stocks down with it? Amazon is down to some fresh lows. Let's take a look at Costco. Costco's also rolled over a little bit from the highs at 1080 down to 1040. I mean, Costco has a ridiculous bar count. This is, you know what? This is another one that I meant to, let me see. I got a $1.15 credit on that trade. It's looking pretty good. 435 bars. Yes, I am liking that trade. What did I put that trade on? Costco. So I'm going to watch a couple things on SPX for this closing bell. We're at 323. I need MicroStrategy to get down to 215 tomorrow. That would be lovely. Costco should be here. Did I take this everywhere? Yes, I did. Yes, I did. Okay, so here's the Costco trade. I have a 1090 by 1095. That's a bull call spread. Then I sold the 1100, 1120. Basically, it's a call condor with defined risk. That trade is currently up. I'm not sure what I pulled in. I think I took a $1.15 credit. Okay, so $1.15 credit. This goes out to next Friday. So I could just take the profit and run. $1.15 is now trading at $1.09, $1.08. Close it out for some profit. The bid ask is a little bit wider. Could I close it out now? Are we going to have a run back up to 10? I mean, actually, let me see this trade. I think this is actually a pretty good looking trade. Let me go to the analysis section. If not, I'll build it out. Yeah, that's the trade right there. Okay. So this is the trade on Costco. Live price is right here. There's live price. We'd have to go all the way up to 1090 to have any type of, not necessarily risk. Like by next week, that's actually my profit. That's a big profit trap. I do like that trade. So I guess my risk is if we're greater than 1105. And let me take a look at the options chain because I can put a little bit of probability to that right now. So let's go into the table. Let's take a look at the 28th. Out to the 28th and go to the 1100. Right now, there's about a 94 to 95% chance that this trade is still going to be okay. Like full profit as is $1.15, but also a potential $5 to $6 profit trap if price were to come all the way back up here with a way out of the money move. That would be unusual. If we get to a one standard deviation move, that puts us around 1065, which is around 25 points higher. We go two standard deviations, I'd still be in my profit trap zone. So we'd have to have a 2+ standard deviation move for this trade to be threatened. And I'm going to leave it. I'm going to leave it alone. I think this trade looks pretty good. I've got a really nice bar count. I'm pretty sure I put this in my Thinkorswim platform. Got a nice little watch list to talk about today. We'll take a look at that when we get logged in. Benji. All right. Happy Thursday. There we go. All right. Costco's looking good. But Walmart's down, Costco's down, Amazon down. Forward guidance on the consumer, cool. Bar count, crazy high. Limited upside. This has only been like my broken record mantra for the last couple of weeks. I don't know how much higher we can go without having this is probably the biggest reality check of the market, which I know nobody's going to be excited about a crash, 7 to 8%. But I will say that whatever possibly turns this market to give this flush down, I still think the market's going to buy the dip aggressively. I think if you're patient to wait for a time like this, it's a good spot. It's a good spot to deploy capital or either one, position for that to be like the bottom, or two, get out of the way, give yourself a bigger margin for error, and then deploy capital. And I'm probably going to do most of my trading. If we get that pullback, I'll probably position out 3, 6, and 9 months and just get it all out there and let the market do its thing. But I'm going to try to stay out of the way if the IV is high enough to then sell. So SPX and S&P related instruments. NASDAQ, same thing, really high bar count. I think we're limited on the upside for right now. Dow, same thing. So am I actively bearish? No. I mean, part of me wants to be, but I also don't know if this market's going to just blow the top off either and be really stupid. So I think it's most likely going to be stupider to the upside than it would be the downside. I think if we have a downside move, it's expected, and then the market finds a way to buy the dip. But an upside move, it's like nobody knows when it's going to stop, and I'm not going to be the one that calls the top. I said this actually. I think the session was yesterday. Unless I saw the S&P at 500 plus bars on a daily time frame, and we were up to these like 6150 to 6200 highs and crazy overextended, then yes, I would go into 2026 actively short. And I don't know what the excuse or catalyst. I said this yesterday. I don't know the what, the why, the when, the how, but call it experience, call it a hunch, call it intuition. I would probably be looking to be short in 2026 if we did not have a correction now, and now ish. Like, I think this market's going to be just a grind fest. It still hasn't figured out whether we like tariffs or not. It's not really going higher. We're getting through Q4 earnings, which is probably as good as it gets. And I would imagine going into this year, there's a little bit more caution moving forward, unless you're just so optimistic about AI. I don't know what 2025, 2026 looks like. So, all right, give me 1 second here to log in. There we go. This is the watch list I want to talk about. So I've got a lot in here. I'm looking for some squeezes. Qualcomm, JD's got a weekly. That's a good one. Weekly and daily looking pretty good. I just hope JD is going to squeeze to the upside. Chewy's got a squeeze as well, but I already took a bunch of profit on that one from like 17 to 36. I rode that stock up for like $20 a share. X, that's not like Twitter, is it? No, what is X? Oh, that's never mind. Duh. United States Steel. Stupid. United States Steel. I was like, X is Twitter. It's privately traded now, or privately held. Anyway, Steel, not doing anything there. What else? Boeing, nice little daily, and I mean that's up to 180 bucks. I got the move out of that I wanted from the 155 buy. Morgan Stanley has a daily squeeze. UAL's United Airlines, that has a daily squeeze. I would imagine this one is probably more primed to come down because it's been American Airlines, United Airlines is like rocketed to like all-time highs. It's been pretty outstanding. ADT, is that the security company? Yep. Sitting here at $7 and change with let's go ADT. I mean, if it was not a $7 stock, I would care a little bit more, but I'm not going to trade a $7 stock and think it's going anywhere good. So probably going to stay out of this one a little bit. If we came back to $5, I will say this: if we come back to $5, I'll maybe throw a naked put on there or something. That's about it on ADT. What else? First Solar, FLSR. Okay. Big drop on this one. So First Solar is down about 48%. This one looks okay. So we've been consolidating. If the IV is high enough, maybe I can find something I like here. FLSR for solar. So 46.6 IV rank. That's decent. Well, we have earnings on the 25th. That's next week. Let's put that on the radar, though. I'll put that on the radar. All right. I'm going to look at that one for my newsbreakers. So that would be FL or FSLR. I want to take a look and see what we have for earnings next week. Let's go earnings screener. So next week, the 24th through the 28th. $46 stocks with earnings next week. TGTX, NVAX. Okay, we got some stocks to look at tomorrow. So anybody in my newsbreaker service, I will probably start pricing out some trades tomorrow. Maybe waiting to take the trades until Monday, but if I like what I can price out, I might just take the trade Friday and send out a video update. So right now I'm looking at potentially 46 stocks that I would say, I'm just going to do a quick circle here. So there would be potentially 1, potentially 2, 3. I'm obviously going to dive a little bit deeper in these. HIMS, that one's going to be somewhat sensitive. RKLB, maybe Snow, the Snowflake. That one's going to have some volatility around it. Dell should have some volatility around it. And that's about it. So of thousands of stocks down to 46, 1, 2, 3, 4, 5, 6, 7 stocks maybe that I'd like for next week. Okay. All right. Kyle, you're long live cattle. It's probably not a bad place to be. What about those vegetarians, vegans, man? You're crushing their hopes and dreams being long on live cattle. When I say squeeze, I mean this. I mean that this stock has been coiled for a while, and it's some type of energy has to go somewhere else. So this is an example. This is why I also think that the Nasdaq. This is why I did a lot of positions on futures here the last couple of weeks, looking at an index play. Nasdaq. Can we blow this top off or have a retreat this way? What I didn't love about the Nasdaq is if I traded this both directions, I would have to go. Let's look out let's look maybe 60 days. I'll price this trade out right here. So what I like about this setup is we've got a really nice squeeze setup where this has been really choppy since December. Okay. Now this market either finds a way to go up or down. I do think to the downside, it's going to happen a lot more aggressively, and to the downside, we might be revisiting like the 100, the 144, the 200 moving average. So if I position for something like this, where I would basically buy a call, sell a call, buy a put, and sell a put, I probably make it a little bit staggered. So the risk reward profile look like this. If price goes up, I've got a dead zone here that I'm paying for on the debit. I've got a call side credit. I've got risk here, and I've got a put side credit like that. Does that make sense? So this would be where I'm losing. So this is my loss. This is my call side profit. So call side profit here, and then my put side profit would be a little bit bigger, right? So what I want to find out is if this move in this dead zone is big enough, or I guess is it a probability that we can actually get beyond it? That's really my question. If I feel like we have a volatility expansion move coming, then I want to get on the, I don't really care what side I trade. I just want to make sure that I can get away from this dead zone, have something pay me one way or the other. Okay. I did a video update, Kathy. I don't have anything today that I'm managing. So no trades have been closed out yet. I'm still looking. So, Carvana, we're down to 246. Actually, Carvana might be in profit right now that you remind me. Carvana, we have a look here. Carvana is CVNA. You son of a gun. So I got a 250 by 255. Curses. This one should What did I get in this trade for? Is it $3 and something? Carvana was filled at 3. Let's see here. Carvana was filled at a 320 debit. It's trading at $3. I'm going to see if this will flush a little bit lower. So on the put side, right now price is below my puts. That's a good thing. And I'm going to see how this one settles. I mean, there's plenty of downside, and I hope we have lots of it. But we are at the expected move. If we can come back down and revisit these lows, I would like to grab a couple of bucks. I've got a pending order on that one. So 320. 1, 2, 3, 4. I'm going to put in a 420 take profit for right now. I'm going to see if I can. Max profit's $5. I'm going to try to get 420 out of that one for right now. See if we just push a little bit lower below the expected move. ENVX, this one did not get the directional liquidity push that I thought. We're trading it. Well, it's back up where I started. This trade might be break even. This expires tomorrow. I might just close this one for a break even. Let me see what it's trading for. Where's it at? ENVZ. ENVX. So it's break even. Let me see what it's trading for. 23 cents. I mean, come on, man. ENVX had a nicer recovery day. I mean, come on, it's still got that $12 strike. All right, I'm gonna hang in there for tomorrow. This is my ENVX trade for newsbreakers. I'm gonna see if we can get another little directional run into this $12 strike. All I need it to be above is if it's greater than $11.23, then I'm making money on the trade. So from $11 to $12, then I've got the trade in for a potential $27 winner per contract. So I'm risking 23 cents to make 27 cents. All I need price to do is get above 11.50. Greater than 11.50, I'm coming into full profit. And a $12 strike is what I'm going after. Okay, and then W, decent little move down. I needed to get back to low 35. It's not there yet. It came down to low 43 today. And then Toast down to about $38. Son of a gun. I needed to get below 41. It was down to 38. And it pulled back. So just a bunch of noise. Well, that's annoying. So I'll wait. I'll wait a little bit longer. Frustrating. It's okay. We'll see what happens. So I'm going to wait. Give it tomorrow. Give it the weekend. Let's see if we come back down and test today's lows. Okay, that's TOST. Let me go to SPX. So we're going to watch SPX 6150. We'd have to move another 37 points in the last 40 minutes to threaten my position. Anything can happen, but it is unlikely we're going to get that move by the end of the day. High, low, we're kind of settling back in here, right in the middle. Tomorrow's trading, who knows? Another day, another dollar. We'll find out. So I'll keep an eye on this one. Chart alarm set. My position that I took this morning. So if you're in my daily profit play, we had kind of a wild start to the morning. I ended up adding some bear call spreads. I put in a hedge as well. So this is 2 bear call spreads up here that if we stay above or stay below 6150, then that's another winner. That's 2 for 2 for those bear call spreads. Obviously, I don't want to see price push higher. I'm putting in a take profit of 0.05. So I got in for 65 cents here. I'm setting in the take profit at 0.05 to close out anytime now until the end of the day. It will probably get filled in the next 30 to 37 minutes before we close. Otherwise, it's going to cash settle as long as we're less than 61.50. Then I'll keep the full 65 cents. So that's looking pretty good. But I'm putting in that take profit order at 0.05. So I'll walk away with 60 cents instead of 65, which makes me 92% of the profit of the max profit. All right, so a bunch of noise. And that's where we're at right now. 610 on the SPY. There's still 610 is like a big pivot point right now. So maybe above it. This is going to be kind of wild and crazy for tomorrow. If the SPY is greater than 610, then we could make a run to 615. If we're less than 610, then we could possibly make a run to 602. Just looking at some of my bigger levels, market maker wise, I mean, does it come back and poke the all-time highs again? And this is just another flush to buy the dip? Yes, no, maybe. But if 610 is a pivot point that's going to flush lower and take out this low, I mean, if we take out today's low, which took out Wednesday and Tuesday's low, if there's any additional follow through there, then I could see like 60. It'd be like 60, 50, 60, 40 on the SPX, or 602, 601, 600 on the SPY. But I think that 610 is going to be a big pivot point for tomorrow. Okay, I want to take a look at this for QQQ. So I'm going to keep watching my SPY, SPX, make sure it stays out of the way for the next 30 some minutes. Should be fine. I want to look at QQQ right here, trading at 536 with a volatility expansion. This has been building up since end of December. The trick here is like the time. If I go out 30 to 60 days, I think that's a big enough window. I think what's out to April? End of April is 56 days. Man, I'd love to get a trade out farther than that. I'd like to actually go out to the end of April, like exactly. Let me see what QQQ has. I think it does. So I can go out to April. Nope, I can't. Son of a bee. So I can go to the monthly expiration for April, not to the end. If I wanted to not hedge, but just play both sides of this out to May or June, fudge muffin. I'm going to see how much this would cost. I'm going to see how much this costs to go both ways. I've got to trade on futures this way. I traded MES this way. I'm going to look at something comparable in April. So April 17 on QQQ. If I were to, we're expecting about a 30-point move. Okay, so can I go from a 37 and 35? I'll basically split the difference. Right now, the broker's saying, hey, if you want that trade, you're going to pay $28 out of a potential $28 to $29 move. So that's not a great trade. But over that same window, would it be a benefit? I don't know. This is there's a couple ways to play this, like ineffective or cheaply, cost effectively. If I were to go 25 points higher, that'd be a 551. 551 by 556. I pay $2 to make $3. Like that trade's okay, but we're gonna have to run all the way to 551 to make that happen. I still have to cover the debit there. And then the flip side of that was up how many points? 25 points. So if I pay $1.97, I get $3. That's a decent like reward to risk, but it's an out of the money trade and it's a lower probability move. If I do the same thing here for 25 points, that would put me down to like 510. If I do like the 510, 505, so I pay 278 to make 222. On the put side, I might go a little bit lower. See if I can pay less than $3 for this trade. So I get $6 of downside, $5 of upside, and I'm getting essentially a 1-to-1. That's a pretty cost-effective way to trade this. That's a lot cheaper than basically paying like a couple grand if I want to do. So I'm going to write this down. So this is a QQQ. If I did the 551 by 556 and the 510 by 504, so that is a 292 debit for a potential of $5 to $6 max credit. So on the call side, I get $5. On the put side, I get $6. That'd be capping my profit. If I turn 292 debit into, $392, $4 and change, that's a pretty good trade overall. Max risk is a couple of bucks. If I did one contract, $290, not the end of the world. It's cost effective as opposed to if I just did the current price, buy one strikeout and then I sell, let's go 25 wide. So the 552, sell 25 wide. Market maker's expecting about 20. I might as well sell 30. So we're at 37 and sell the 57 and then the 35 to the 05. Okay. So this looks a little bit better. Now, the question is, am I willing to risk $17 to get this trade profitable? So I do think there is an expansion coming. Whether it's up or down, I don't really know. Okay, the trickiest part about this trade would be this. If the market goes up, let's say to 545 and then drops $30, okay? Well, that puts me down to so let's say it gets up on the high side of 545 and then drops $30 to 515. Well, my 515 trade is only going to make me $20 right here, and I'm only going to make a couple dollars of profit when I'm paying $17 for the trade. So that's what I'm saying. Like I'm better off doing like the very cost effective. It might be a slightly lower probability, but directionally, it's like I don't know if we're going to go in one direction. So I almost like the idea of trading the debit spreads, 551 by 556. I mean, I guess I need to see like what is this potential move? $30. We go up 25. I mean, do we get to 560? What's that run for the end of April? Could we get a 4% move? Maybe. Maybe. Let's find out. So 551 by 556. Let me see what this costs to go like $10 or 9. So I'll go 9. I'll go 9. So it cost me $3 to make $9. Okay, fine. And then on the bottom side, a 510. Let me check my moving averages here. So a 500. I mean, I want to be able to trap some profit in this like 500 or this 490. So this is one way to look at it. So if I did a 510 by 500, okay, so for $4.76, this isn't a bad trade. I can go both directions. I can pay $4.78 to make $9 on one side or make $10 on one side, which does give me a favorable reward to risk. I can trade this either direction. Max risk on this per contract would be about $475. Full profit's going to be expiration. But if I can turn this into, I mean, 476, if I turned it into 576 or 676 or $7 and change, like I'd still be happy with that as a return on risk. It's not bad to make $2 or $3 on this trade. I'd be okay with that. What we need to have is a move though. So how much do I love the trade? It's okay, right? It's okay. Like right now, this is about a 55% chance of profit. It's out of the money. It doesn't cost me a lot of money, but we definitely need to see some movement. Now, I almost would rather do something like this. I don't mind the Qs. 490 is the level that I'm watching. Let me see if I can do something comparable, either 56 or 9. It'd be like 56 to 90 days out. This trade might be a little bit better actually. So if I went out to, this is QQQ. If I went out to April or May, I'm going to do an 85-day expiration. Get rid of this trade for a sec. I'm going to buy this right here for $5 and then see if I can put in a 490 put. So that price is around 490. Okay. So that is a decent trade right there. Now I can make this a spread. See if I go a little bit wider here. Okay. I think I'm going to take this trade. So I'm going to get $2 of income. There's about an 87% chance of profit. I wouldn't have any assignment risk unless the Qs were to drop down to 490. There is risk in the trade, but I'm going to take this on a portfolio margin account where I'm willing to own the shares of the QQQ. If I had any assignment, it would be the following strike price. I get assigned at 490 minus the $5 trap minus the 207 credit. I'd own shares of the QQQ at $482. So if I took any assignment at 482, that's about a 10% correction in the Qs. Could we have a 10% correction in the Qs? Yep, we could. If I have a profit trap, then I get a $500 bonus right here. Okay, and if we're down below that, but we stay above 490, then I can make $700 on this trade. So I've got a max profit of about $700, and that'd be the sweet spot. There is risk on the trade, but like I said, I would turn this into a ownership position. I would just let the shares get assigned at 490 or even take the assignment at 490 with knowing that my break even would be around, what would that be? 482. So I'm going to take this trade. It does tie up a little bit of buying power. That's why I'm going to go portfolio margin. So this account, this account, this account, this account, and this account. They're all going to get some love. These, because if these were assigned, this would only tie up around 20, probably 22 grand, 24 grand or less, because some of these are portfolio margins. So, all right, let me see if I get filled here. At least $2, maybe 205 is my better price. Let's find out. So QQQ, try this trade here. Only requires about $1,800 portfolio margin. That's good. So that's a 207 fill. Let's see if I can get filled at the mid. 207 not filling. 208 is the mid. 206, 205. Come on, just make sure I want to get over $2 on the trade. You dirty dog. 204. I should get over $2. All right, got filled at $2. Very nice. Okay, 9732. 204 getting filled, no problem. Okay, and then 7336. And 6535. Okay, I'm going to add that in. So this is a QQQ. This is a May 16th expiration. The buy 535 put, sell the 530 put, sell the 490 put, and to define the risk, I'm going 430. Gives me $2.04 credit. So it's a 1111 trade. And I'm getting willing to own QQQ. That break even would be 490 minus 5 minus 204, 482.96. Okay, so I like that trade. That's added in. Good. Very good, very good, very good. I like that better than trying to trade both directions. Although I do think the market's likely to make some type of volatility move, whether it's up or down. We need some energy to go somewhere. Like I said, market makers are not stupid. So if the market makers decide to push this thing up by like 10 to 15 points and then drop by 20 to 30 points, they can still sell up here and sell down here, and price doesn't go really anywhere. That is going to be threatening one side or the other. So in order to avoid the lopsidedness, I'm giving myself a margin for error where basically this would be my assignment window. This is going to be a profit trap. If price goes higher, I still keep the $2.04. If price falls down here, I make $500. Plus I have my $2.04 here. Okay, so max profit for me would be about 704. If price goes higher, I'll keep it. Price goes sideways, I'll keep it. Price goes down a little bit, I get $500. Price goes down a little bit more, I keep the sweet spot. Price comes all the way down, I'm willing to take the assignment and repair this trade. Okay, all right. That's a good looking trade. I'm pretty happy with that one. Let me go into some ownership of SPY here. So I still have, see, the shares got called away for profit. Okay, I made some money on SPY. That's good. Let me check this account here. Still have the shares. My let's see, where's my call at? 595 out to April. All right, so I did a roll on this one. Let me just double check my SPY ownership. Okay, that's a profit trap. Waterfall. Just double checking my positions here. There's a SPY hedge. Let me try. There we go. Intel. All right, just got to locate something. Tesla, LVS, NVIDIA, QQQ, SPY. Did it. NVIDIA did it. Microsoft, Oracle. I got to check a couple things here. Oracle should be in this squeeze somewhere, I thought, bar count wise. Let me let this thing load up. I'm going to keep searching over here. Best trade this year so far? I don't know. Honestly, my little like steady income trades like week after week have been pretty solid. I'm just conservative slash cautiously bullish, and so I'm just staying out of the way, giving the market a lot of room for potential drawdown or pullback, and putting in anywhere between like 50 cents and $1.50 a week, taking those trades every single week. That's been, I mean, I'm up like almost 8% in my accounts, and that's a pretty good start considering the S&P is up around 4%. So, and I haven't really done anything. Gold is still long, so that's obviously a good trade. Alibaba has been one of my biggest runners, which fine. I was up like 10 grand on Alibaba this week, so I closed it out. I didn't take the extra jump they had on earnings today. I closed out yesterday at 126, and they popped up to like 137, 136 or 7 today. I didn't get that extra $10 jump, but it's fine. Anything, I don't know. There's a bunch of stuff. I mean, I look at my portfolio. There's a ton of stuff going on, right? I've got lots of trades. So I just keep grinding and just make sure that this number gets bigger. So if this number gets bigger, yay, that's what I want. That's all I'm looking for. All right. I'm looking for Oracle in here. So this is a good little setup. I'm looking to see what I've got for bar counts. Let me load this thing on my bar counts. Okay, so AVGO, META. I'm actually putting it's a call condor, broken wing butterfly, and meta, which I actually like. I think this one's gonna probably make its way a little bit lower. I actually might look at meta. I don't really want to take a short on that one, but I've got to price it out, man. 500 bars is insane. Palantir at 448 bars. The reason I'm bringing this up is because look, I think that these stocks right here will have a harder time going higher. This bar count is so ridiculous, and the percent away from it is pretty ridiculous. I would just say this: look, T-Mobile is 332 bars away from its 200 moving average and also 26% overextended. Netflix is 335 bars away and 30+% overextended. Now, I understand it could still be like we could still get more extended. Like the market can always go higher. I get it. But I think that T-Mobile, Netflix, Gold, Progressive, Costco, Palantir, this is XLC for communication services. This is a sector play, and it has a 485 bar count. That's massive on a sector that's like 14% overstretched. Like that's probably going to go sideways. So I don't know if this whole thing to me is like Mag 7, right? Is Mag 7 going to roll over to the downside? And if it does, is everything going with it? Is Meta, part of the Mag 7, going to roll over with a 500 plus bar count at 23% overextended? I mean, I've got to look at it. Is AVGO, which has hit the 200 moving average, but we spent 514 bars closing above it, and it's overextended by about 23%. So that sort to me looks pretty darn good for like a toppy move. And again, tops can come in all shapes and sizes. We can have a toppy move that's like, okay, it's already up here overextended, and it just keeps drifting and drifting and drifting and drifting, and then eventually makes its way lower. Or this goes here and goes sideways and then rolls over, or it just starts to fall now. I don't know. But the hard part is can I time this to have something that's out of the way in order to make money as long as price stays pretty much like if price struggles to go higher, I can position for a potential gain. Okay. So I do want to take a look at this, and I'm going to take a couple of snapshots here. So these bar counts to me are pretty interesting, and I'll price those out. Okay. So I'm taking that QQQ trade, and that is a 535 by 530. So that's right here for a bear trap. That's a bear put spread, and then a 490 by 430, which is my wide open credit spread, which is a little bit, obviously it's wider. So I'm going like 60 wide, but I'm doing it that way because I would gladly own some QQQ if I could get assigned at 490. I don't want it. I really don't want it. But if I did have to take the assignment, I'm confident I can repair it. So I'm still going to look at this SPY trade really quickly because I know that one in particular account, I did a roll. I'm looking for it right now. Still got to find it. 520. I'm looking. There it is. Okay, fine. Crying out loud. Okay, so update rolled 595 by 560. Okay, so my break even is 585.85. 585, and I get it called away at 595. That's a 915 credit on 100 shares, so I'll make 915 bucks on the SPY as long as we stay above 595. Cool. If not, I'll keep rolling it. I'll keep working it down for credit. But that's, any ownership that I've taken, I've already flipped it into like a $10 position, like a $10 per share. So I do something similar on the Qs. If I can flip it for, 10 bucks, awesome. I flip it for 10, 15, $20, even better. If we came down to this level, I'd almost feel like I could flip it for a run back to the highs and maybe flip that for like $40, $50 a share. That's a much bigger winner, obviously. So, all right. I like that trade. That's QQQ. I've got the screenshot right here. I'll take another zoom in. Let's go. Actually, you know what? Let me take a look at this one. So I've got the shares right here. 595 by 560 is my collar trade. Could I roll this? The only issue is I don't think I have anything until May expiration. So let me see if I roll this. So just on the 595 by 560, if I were to roll this, I could roll it out to April 30th, going out another 13 days, and keep the strike the same. So I could basically get a free roll up to $1. That's not bad. I could roll it up $1, get an extra 20 cents on that, and that one's going to cost me a debit. So the best trade to me is either keep it the same at 595, lower the cost basis another $1.15 to $1.20, or roll it up $1 and try to get an extra 21 to 25 cents. So either I get $1.15 or maybe $1.20 to $1.25 added to my bottom line. But I've got to go out an extra 13 days, which is fine. I'm likely still going to get the stock called away. I think it's probably better to lower the cost basis by another $1 and change. I mean, we're still within the expected move. I'm good. Maybe making an extra 8 cents is not worth the extra. I'd rather grab the dollar cost averaging lower. I'd rather move this collar out to make another $1. See if I get $1. I mean, $1.20 would be great. Let me see if I can get $1.20 on this. So I'm going to try to roll this April 17th collar out to April 30th. See what I can get here. So $1.20 not filling, $1.19 mid. Okay, let's go $1.15. You son of a gun. $1.10. I'll just penny it down. $1.14. This is the most liquid instrument. Let's go. $1.13. Okay, so that just got rolled. All right, update. So update rolled out to 4/30 expiration. I still have the 595 sell call, and I've got the 560 buy put. I'm going to look at that debit, and that brings my cost basis down. That was a $1.13 credit. So the break even now is a where to go? 585.85 should be down to 584. So 585.85 minus $1.13. So 584.72. Okay, and if it gets called away at 595, I make 10.28 a share, make over $1,000. That's a nice little flipperoo. It's taken me maybe a month to do that. I'm okay with that. All right, so I'm good on that update. Yeah, I like that trade. I want to take a look at some of these kind of overextended moves. AVGO, again, like this semiconductor stuff, like who knows, right? I wonder, we've already had like a bit of a, like if this one's not going to move, that's kind of a good thing. Like if the energy has been sucked out of this one, then I like that trade right there, just not really going anywhere. I don't know what the premiums are on AVGO, but I mean, could I Could I fight against Nancy Pelosi and win a trade? Well, we have earnings on the 6th, so I'm probably not going to take that trade. Post earnings, though, maybe. Earnings play like newsbreaker service, yeah, maybe. I might just take the trade as is. But the fact that we're not looking at any type of volatility expansion, I might just stay out of it. Meta. So I priced out a broken wing butterfly on Meta, which is fine. So I've got a trade this week that it expires on Friday of next week. Here's my trade on Meta right there. So I have a 745 by 750 by 775. That's a broken wing butterfly that should pay about $43 a contract, and I've got a $5 profit trap in case it comes back to retest the highs. Netflix is looking better. I need it to stay below. I need to stay below 1040 by next Friday. This one's looking a little bit better for profit now. That's my broken wing. I'm actually in profit on this broken wing butterfly now, which is good. But the nice thing is well, it's not awesome. It certainly has some potential risk in the trade. We've had recent highs at 1060 on this one. All right. Real quick before I'm just going to keep a close eye on this one. Don't tell me that the SPX wants to run to 6150. I don't think it will in the next 10 minutes, going up another 30 points. I've seen crazy stuff happen, but I don't think that's necessarily going to be the play. So daily profit play, the bear call spread should be good for 2 winners, which chips away at the little loss we took this morning, which is fine. I'd rather take that off the table. But yeah, all right. So we got 10 minutes left, and just make sure this stays below 6150 for a couple of winners. Meta, let me price this one out. So I like Meta. I might go out a little bit farther. So bar count wise, this is why I like the trade. Meta here at 696. I just want to see, I don't know, let's just price it out. Let's go Meta. Let's go out to maybe April. Okay. And if I were to buy, let me buy like the 740, 745 bull call spread. So that's out of the money. And then I want to see if I can sell something way the heck above that and still get credit on this trade. So if I did like a 10 delta 810, how much wider do I have to go? Ugh. Nope. Nope. That trade's awful. Yeah, that's just not a good trade. So I mean, the profit trap is nice, but only pulling in like 66 cents. I mean, it's a high probability of profit. That's just a wide. I mean, obviously Meta can go up, right? And if it goes up above 810, then I'm taking on $4,000 of potential risk, which I get a profit trap that takes down, $500 or $600 of that trade, but I'm not going to take that trade. I think I saw the same thing yesterday. All right. It was a 605 by 600. So make sure you get that right. It's a debit spread, and so I want to see if price will go down to 600 tomorrow. So no update. We're trading right in the middle, right? We're trading at 610. So I need to see if price will get to 602, 601, 600 tomorrow. If it goes back up to 612, 13, 14, 15, we make money on the upside. So my goal is just to turn that trade into profit. Either one, either the 611 by 612 or the 605 by 600. Either way, I'm looking for net profit. Same capital in each one, and looking to see if I can carve out a net profit. All right, let's go AVGO. Let's go XLC. Let's go XLC actually. XLC. I don't know if the premium is going to be awesome on this one, but I am kind of impressed that this thing has gone as long as it has since we have hit. I guess we hit it right there. So it's only about 320 bars. But as far as this run all the way back here, I mean, that's a big fat bar count of 480 bars. Also a stretch away move from these recent highs. 13% away. That's a pretty big move, man. So, all right. I do have this trade running with a 111. I was willing to take some assignment down here. I'm going to try to do something similar on the upside. Let's look at the expirations on XLC. So if I went out 45 to 56 days, I don't think the premiums are going to be that awesome, though. I really don't. So if I were to do a 105 by 106, or even move this out of the money here, so I get $1 there, cost me 25 cents. And if I sold, yeah, I'm just not going to get the premiums that I want. If I sold like the 113, no credit whatsoever, that trade's crap. You just don't get the premiums you want on the sectors. So I will just wait. If we get a dip or a pullback, then I will get the dip or the pullback to buy more. Otherwise, I'll just stay out of the way with these. That's a 111 trade for 55 cents. All right, that's XLC, Palantir. Who knows, man? I mean, this one had a pretty big IV crush post earnings. It's still pretty high at 70. I don't really want to, call the top here, but I do think over the next, I'm curious here in the next like week, is Palantir going to get to all-time highs again? Let's see if I can position for it. So go to next week. If I did really, so this is only calling for like an expected move of 115. Let me see where these bid-ask prices fill in. Previous highs at 126. Give me an options chain for crying out loud. There. All right, so a 125 is the high. So if I move these up, let's say that I wanted to pin the 126. Oh, that's a terrible trade too. So buy, sell. That's not an awful trade, but I obviously don't want to be short on Palantir. So I'd have to make a spread out of this and go 5 wide. So what's that? I don't like this trade. So I could get a trap here for $1. Maybe a trap there, maybe a trap there, maybe a trap there. Oops, what was that? So I can get 50 cents on that trade. It's not max loss. What the hell is this thing talking about? I get $1 trap, pin it at 130. There's anything, so my profit would be 50 cents below 130. No, I just don't like this trade. Not worth it, man. Not worth it. If I were to say 125 to 130, nope, that's still not worth it. That's so much risk. Probably the profit's really high, but it's like I'm not that interested in making $37 for a $2,500 risk, or not even that. If it was ballistic, then I could still take unlimited risk, which is stupid. So, all right, never mind. Well, you know what? It's kind of hard to get a price that you want in the top. I'd like to short some of these stocks, but I'm probably not going to. I'm just going to wait. I mean, if Palantir wants to come back down to a more attractive level, I'll just take more ratio spreads. If I miss the dip here and this thing rips back up, then I guess I should dollar cost average into it. We're already overvalued though. That's a lot of these stocks. It's like they're above fair market value. Palantir, their price to earnings is outrageous. They've had insiders transactions for the last year. They've sold $3.1 billion worth of Palantir inside. This price to earnings ratio is insane. Fair value is $83. We're trading at 106. It's like, I don't want to buy this thing now. Stocks can be stupid. I don't want to call the top, but I do want this thing to pull back. So I guess I'll just wait. Can we pull back into the 80s? Sure, maybe. Right? So if it pulls back into this window, then I'm more interested in dollar cost averaging. That's about it. So I guess I'll be patient. Royal Caribbean. Ooh, this is another one. Finally starting to top over a little bit. Another one that has a very high bar count since here. So about 327 bars, overextended on the percentage basis. Like that's way up there. 28, 29% overextended. but you can see we're already making a pretty decent effort to get back to it. Crazy. But do I want to call the top on this? Not really. We have earnings out to April. Earnings that happened back in January were missing revenue, but it didn't stop price from going higher. So anyway, that's it. Bar counts are everywhere, but the pricing is not what I like. GLD has a bar count. SPY has a bar count. SPX has a bar count. Dow, DIA has a bar count. JPM has a bar count. TSM has a bar count. If I get the prices that I want, I would like to short them. But I'm not going to trade for like less than $1 credit and have $2,000, $3,000, $4,000 of risk. So I'm probably just going to be patient, sit on my hands, take a bunch of income trades like I've been doing, and just keep whittling away at some income. This is, to me, looking pretty promising for just some moves ahead. I'd say over the next like 30 to 60 days, we're going to get some volatility, which I'm good with. I'd like to see for tomorrow. Okay, 323 MicroStrategy. I'd love to see this thing dip a little bit lower towards the 315 strike. Okay, $100 challenge, my daily profit play. We've got full profit there. Full profit there. And I've got the debit out for tomorrow. Okay, so I don't think my SPX actually filled. Cool. So I'm just going to get the full 65 cents cash settled today. Yay. Let me update that in Telegram. So here, bear call spreads, 0.65 credit, closed, 0.0, full credit, end of day. Okay, taking the profit there, chipping away at that little loss we took this morning, and then tomorrow's a new day. Let's see what happens. Double up alerts. I'm trading the SPY both ways. ENVX, if we get a flow into like, it's a break even right now. If I get a push into $12, that would be nice. And then double up, or that's double up alerts. My newsbreaker service. I've got some trades to manage. We got expirations out to next week. I'm going to give some of these the chance to get the expected move. I've got open trades on Shopify, MicroStrategy, Lyft, Lyft, Carvana, ENVX, Wayfair, Toast. So a couple of trades to watch. So I'll spot check those tomorrow. Anybody in my newsbreaker service, look for a video update for me tomorrow. I'll post that in Telegram as well. And if I close out any trades, I'll update on alerts. I'll get it to you in real time. If I just take a look and say, hey, I'm going to give these until next week to move, that's the end of the month. We'll see if we can push towards some of these expected moves. Okay. Other than that, fresh high in the portfolio today, which can't complain. But I kind of will, because I'd like to sell some more stuff. But I think the best thing right now is like the call, the pricing skew I see is I'm not getting the premium that I want to sell calls. As far as the way I want to trade it, like I think these bar counts and stretch away moves are high enough that I'd like to be positioning for like, broken wing butterflies, bear call spreads, call condors, things like that. But I'm not going to take on, $3,000 to $4,000 of risk for like a $50 profit. Because all it takes is one of those trades, and it's like, what the hell did I take that trade for? So, anyways, I'll just keep playing the wide margin downside and just let price continue to do its choppy, crappy stuff. But I'm just warning. There's certainly a reason to be a little bit cautious. I'm not saying a bear market. I'm just saying cautious, because to me, with the stretch away move in the bar counts, look, this market can keep going, right? We can keep going and going and going and going and going. But if we get to like I would even say like 15%, we get like 15% away from this 200 moving average, I'm going to watch this structure very carefully, and I would expect this thing to break back down at some point. But until then, if we struggle at this resistance and this resistance and this resistance, and this market comes down again, there might be enough momentum to get it right back into this choppy zone. And this might be what we're dealing with, is just a lot of noise, and everyone's wondering where the big opportunity is. And it's like, it's nowhere. There's no big opportunity. You just freaking wait. right? You wait for this thing to just like chop around and trade it. You wait for this thing to give you a really good dip to buy. And beautiful thing is like, I don't have to be super precise with options. If we come down to attractive levels, I will just sell more premium, give myself a big margin for error. And if it goes back up, I make money. And I'll do that all year if that's what we're dealing with. Okay. So we'll try to figure it out. All right, cool. I'll let you go for today. Thanks for being with me. Happy Thursday. We'll come back and do it again tomorrow. All right. Thanks, everybody. See you Friday. If you're watching out here, youtube.com/Chris Pulver, youtube.com/Financial Wars. You're watching on LinkedIn, on Twitter, wherever you're watching. Kindly, whatever, give me a follow, like, subscribe, all that good stuff. Support the channel. I appreciate it. And I'll see you tomorrow. All right. Thanks, everybody. Take care. Bye.